Hello and a warm welcome. You've joined us on Buy Now, Sell Now right here on ET Now. I'm Ashesha Advaryu, with me is Ankita Saxena. And after the kind of week that we have seen so far, turning out to be a good day for Indian equity markets, with Nifty now surging nearly more than 0.5% in today's trading session. We are now trading at that 24,190 mark. So clearly turning out to be a good day, at least as compared to how the last few trading sessions have been. Now let's also talk about the Nifty Banking Index, because we have seen underperformance over there in yesterday's trading session. Today, of course, that index is up nearly 1%. We are seeing rebound come in for the Banking and Financial Services Index in trade today. 58.35 is where the Nifty Bank is now trading. But in terms of individual sectors, let's pull up a couple of them, especially IT, which continues to remain in focus. Nifty IT index is now down 0.6% in an otherwise very strong market. This index is sitting with a cut of nearly 190 points in today's trading session. A couple of movers then, we have Ather, which is in focus on the back of Hero MotoCorp investing about 1,000 crores via preferential allotment in Ather Energy. That stock is up nearly 7% in trade today. We also have Belrise Industries in focus on the back of QIP, and a couple of newsmakers from yesterday. Just Dial, for instance, gaining for the third consecutive day in trade today. Just Dial should also come up for you on your screens. That stock is up another 5% on the back of that big management rejig that came in. And other than that, cement counters like Nuvoco Vistas also continue to remain in focus today, and that stock is also up nearly 7 to 8% on the back of very strong management commentary that came in with respect to pricing and demand going forward. So Nuvoco Vistas is also gaining in trade today from the cement sector. But shifting focus then, this is a show where we discuss and solve as many as we can queries. You can keep sending them to us. The number is flashing for you at the top of your screens. You can keep sending your queries and we'll answer as many as we can over the course of the next 1 hour. We now have Shahina Mukaddam, independent analyst, who is now joining us. And on the technical side, Hemen Kapadia, technical analyst at DR Choksi Finserv. Thank you for taking your time out and joining us here on ET Now. And Hemen, let me come to you first and your view on the market. With Nifty now hovering near that 24,150, 24,200 mark, what will the technical view be on the market at this point in time?
A very good morning to you, Ashesha. Thank you for having me on the show. It's always a pleasure. This is the 22nd trading session, Ashesha, where we're in a range. 23,800 on the downside and 24,588 on the upside. So till we don't give a breakout from the range, I don't think we're going anywhere. The VIX is at 13, which is good. As long as it doesn't cross 15, we are safe from that point of view. Brent is up and the weekend missiles keep on getting fired. So till we don't overcome this range, and after 22 trading sessions, Ashesha, I'm not sure when it's happening. But on the other hand, the bias seems to be more positive than negative. Though we haven't broken on the upside, the downside 23,800 has been protected multiple times. So only if that breaks in terms of closing is there a cause for concern. So one needs to be specific. You have the pharma index posting a fresh high almost every other day. So that continues to be positive. Metals are oversold. A bounce could be coming in the next 5-7 trading sessions. IT was oversold, gave a recovery. Cement is oversold. We don't have a cement index, but cement looks like bouncing. So it's very stock specific. Market, there is no trending bias per se, Ashesha. 24,588 needs to be overcome, at least on the daily, if not the weekly.
Right, Hemen. Thank you so much for giving us that lowdown on how the market could actually shape up. But let's get going with all the stock-specific questions that you have been writing to us with. The first one coming from Raghu from Bengaluru. He says he has IDFC First, the entry price for which is 80 rupees, and he wants to know the short-term target for that. Coming to you, Hemen, IDFC First Bank for the next 6 months, what would be your targets?
Very good morning to you, Ankita. IDFC First 6 months target, we're at 79.95. 6 month target would be 87. I would be pleasantly surprised if it overcomes 87, but 87 is the target.
Right, so that's the short-term perspective, but also he wants a long-term perspective as well. Shana, let me come to you for IDFC First Bank. For a longer period of time, say for the next 1 year, would you recommend a hold on IDFC First?
Well, valuations are not, yeah, good morning, everybody. Valuations are not that expensive, it's just about 1.4 times price to book. So I would say, and even asset quality is improving. I would say keep a stop loss as Jimenez suggested and hold it for the upside of about 87 rupees. Yes.
Okay, so that's the view coming in on IDFC First Bank. But we also have Krishna Rao, who has written to us from Hyderabad, and he has a question on Marksans Pharma with a long-term time frame. Shahina, that question will be for you then. Marksans Pharma, do you have a view on this counter?
Well, yeah, actually, after a long period of, the stock coming off, it has started again, going back again. I believe, the US market should start looking better for Marksans Pharma in terms of valuation also compared to the other CDMO type of companies. Valuations are still attractive. It is just about 25 times, I would say, a P 1 year forward. So I would say Marksans Pharma looks decent at current levels and one can hold. You can look for a target close to about 320 rupees over the next 1 year.
All right, let's move on to the next question. Ashutosh is writing from Ghaziabad. He says he has Reliance, the entry price for which is 1200 rupees in HCL Tech. The entry price is 684. Should he hold or sell today? Okay, he's an intraday trader, I guess. Himain, coming to you, he's sitting at a profit for Reliance. Can he sell it today? And of course, HCL Tech, 684 is where he's bought it at. Can he sell it today or do you see more upside? I'm guessing he's not given any time horizon, but I'm sure he's trading. That's why he wants to know if he can sell it today.
Okay. Intraday view for Reliance, Ankita, we need to sustain above 1311 for at least 20 minutes for it to go up. Having said that, he can keep a stop loss of 1300. These are spot levels, cash market levels. If that breaks, I think he can exit. As far as HCL Tech is concerned, Ankita, he needs to keep a stop loss at 1169. If that breaks, it's a problem. If he's going to expect any intraday appreciation, we need to sustain above 1182 for at least half an hour. Only then we see an upside coming in. So it needs to keep the levels in mind.
Okay, so that's the view coming in on HCL Tech, and in any case, IT sector has been in focus for the last several trading sessions. But Mr. Manu Bansal has now joined us on the phone line. Mr. Manu, morning, can you hear me?
Yeah, good morning, ma'am.
Please go ahead, we can hear you.
Ma'am, actually, I have a 4,000 shares of Canara Bank with an average price of 140. Now I want to sell the shares, and I want to know what price I can gain the profit of
Okay, what will your time horizon be?
ma'am, short-term period for 2 or 3 months.
Okay, 2 to 3 months. Heyman, what will your view be on this counter, Canara Bank?
Firstly, we need to designate a stop loss. 120 is a stop loss, closing stop loss. This breaks, we need to book a loss. Having said that, this time frame is 2 to 3 months, but a very short term view says we don't close below 124.50. A bounce is coming. If this needs to has to fructify into something more positive, a close above 131.50 would mean positives on the short term. And keeping his time frame in mind, if this happens, one can expect 136 to 140 in the time frame that he has mentioned.
All right, let's move on then to the next question coming in from Krishna from Bengaluru. He says he has Bajaj Auto. The entry price is 9,900. He wants to know if he can expect Bajaj Auto to hit the 1,200 mark in the next 3 months period. I mean, for the next 3 months, what are your targets for Bajaj Auto? And he wants to know if he can hit 1,200 mark.
Okay.
12,000, I beg your pardon.
Crystal ball gazing is slightly difficult, but on a serious note, I think if I would request him to extend the time frame, he's very specific of 3 months. Stock like Bajaj Auto, I think you need to have a slightly longer time frame. Okay, coming back to that, we need a close about 10,450 on the weekly chart, Ankita. If that happens, then I'm not sure about 12,000, but one can see a stock price of around 10,750. Having said that, if you have a longer term time frame, which he doesn't have, I would expect 14,000 and more in the next 18 to 24 months.
Okay, so that's the view coming in on Bajaj Auto, but we also have Mr. Joshi who has written to us, and this is a question on MOIL and NLC India for the long term. Shahina, what will your view be on both these counters, NLC India and MOIL from the mining sector?
I would prefer NLC over MOIL if you're holding it for the longer term, because I believe there is a lot happening in terms over there in the mining, overall mining, and new leases that they are getting. I would say that NLC in terms of valuation also is more attractive. So if you want to hold one of the two fundamentally, I think NLC looks better.
Right, and a whole call on NLC India versus MOIL. But let's move on to the next question that is coming in from Girish Iyer from Thiruvananthapuram. He says he has Centrum Electronics. The entry price is 3,020 rupees, and he says that is there any upward scope in the short term, or should he exit? He's already sitting at a good profit, Himen. Should he start booking his profits? Because he's a short-term trader, I believe. So for the next 6 months, do you see more upside? Or, after the stellar move that it's shown in the last 6 months, almost 60% of an up move, do you see the stock to take a bit of a breather and therefore he should exit now?
I think I'd agree with you, Ankita. It's had a stellar run, looks good, but it's sort of tired. It's slightly, I'm saying slightly because there's a short term view that I'm taking. Medium term, it's heavy, but short term, distinctly overbought. If things need to improve radically from here, weekly close about 3,800 would be the first step. But yes, we seem to have stagnated and there's no harm in taking some money home. If it's a longer term time frame, only and only then do you hold. Otherwise, some profit booking doesn't seem like a bad idea, Ankita.
Okay, so that's the view coming in on Centrum Electronics, but we have Prashant who has written to us from Bengaluru, and he has a question on TCS. He has about 100 shares bought at 2119, and I believe the stock is currently at those levels, 2182. He's asking whether he should continue holding on to this position or book profits. First, Shahina, let me come to you. What will your fundamental view be on the entire IT sector and on TCS in particular?
Well, TCS, I think they have projected a growth of about the guidance about 1 to 1.4% type of growth. I believe in terms of valuation, also the stock has corrected substantially. So if you're a long-term investor, I would say that the IT sector is, I would say, coming back into some bit of buying. If it is a small percentage of your overall portfolio, I mean the overall IT sector, then you could continue holding TCS for the longer term. I think over the 1 year, it will consolidate like the rest of the IT stocks, because there is some bit of change that is happening in their overall outlook in terms of the segments that will contribute to the overall growth and the impact of AI on their global revenues. So I would say yes, continue to hold if it's a small percentage of your overall portfolio. Otherwise, you could switch to some other sector which likely should do better in the next 6 months to 1 year, something like even like a banking finance sector, which is actually looking much more robust for the shorter term.
That's the view coming in on TCS fundamentally, but on the technicals, Hemen, given the kind of volatility that we have seen in IT, although TCS has run up quite a bit, at least in the last 1 week after it reported its results, what will your view be on the charts?
From a slightly short to medium term point of view, Ashesha, I believe the worst is over for IT and TCS. It's not going to be a spectacular rise, but it's fallen off a cliff, oversold, positive divergence, base formation. Everything seems to suggest that there is respite. The respite is not yet over, should hold for some time. So, succinctly put, hold. We need a close above 2249. It's got ex-dividend today. A close about 2249 and we'd see 2450 and maybe even 2600. But this is from a slightly 6-month point of view. Simply put, hold. I believe the recovery is just beginning.
Right, let's move on from TCS to the next question that is coming in from Vandana Jindal, who's writing in from Mumbai. She has GNFC. The entry price is 703. She wants to know if she should hold, sell, or buy more to average out. She's sitting at a loss. Shana, I'll come to you for GNFC. Do you see any kind of a reversal coming in on this chemical name? Because, I mean, as far as valuations are concerned, there is a bit of a valuation comfort there. But do you see any reversal that could perhaps come on GNFC? It hasn't done much.
Well, for the shorter term, yes, it could continue to consolidate because of the issues that we're having in the Middle East and the impact it is going to have on their raw material costs. But I would say that they are, as you put it, very attractively valued. So if you're a medium to longer term investor, yes, you can hold. I would say hold with a stop loss of close to about 465, and then, if things sort out in the Middle East and the raw material costs come back into more attractive levels, then yes, the stock could give you a decent return, and you could see something like close to about 600 rupees. But I would say this is subject to things settling in the Middle East soon. Otherwise, the stock will consolidate at least for the next 6 months if things don't even out fast in terms of raw material prices.
So that's the view coming in on GNFC, but we have Partha Sarad who is written to us from Hyderabad. Now he has a question on Ather Energy, a stock that is gaining in trade today on the back of that Hero MotoCorp news. The stock today itself is up 7%. He has about 6 shares bought at 609 rupees per share, and he's asking whether he should continue holding on this position or add to his position. That's the view coming in. Ather Energy. Hemain, first up, your call after the 7% uptick that we've seen today.
Actually, a small caveat in the sense, data, we have data from 2020, 2022, that's when it got listed. We're at all-time high, so I don't have any known resistance levels. Having said that, whatever time frame we have, short-term, medium-term, long-term, we remain in a safely ensconced in a uptrend on all time frames. So I'm not sure about adding more, but I would say hold. We are in a structured move, higher tops, higher bottoms, no negative divergence yet. So yeah, the only hitch, if any, is I don't have any known resistance levels, but hold. If this has to continue, it looks like continuing. Two couple of things need to happen. It needs to sustain above 1407 from a closing point of view for this positives to continue playing out. And secondly, if we have to make new all-time highs, we need to close above this recent high of 1538.50.
Okay, and Shahina, what will your view be on Ather Energy after the news that came in overnight with respect to Hero's investment in Ather Energy?
See, Hero already held about 40% equity, So them adding stake, I would say, I wouldn't take it as either a positive or a negative to make fresh investments as a small retail investor into the stock. In terms of fundamentals, actually, if you see FY26, they have been able to bring down their losses from, say, 700 crores in the previous year, FY25, to let us say about 434 odd crores, if you look at on the EBIT level in FY26. So yes, they are able to reduce the losses. But I would say that if you compare their valuations, market cap is almost about 49,000 crores. To in the next over the next 1 year or 1 or 2 years, I would say it is expensive. Having said that, I think if you're a very, very long-term investor, if you've gotten at very good low levels, there is no point in actually exiting, because fundamentally and technically, in terms of valuation, while it is expensive, the overall product, it seems, or at least what we believe, is very superior to the rest of the products that are there in the market. So for the very long term and on a EV two-wheeler play, yes, it is interesting, but I would not be entering at current levels. Please wait for dips to, or maybe substantial corrections to actually get in.
All right, let's move on to the next question that is coming in from Murlidhar Rao, who's writing in from Bengaluru. He says, should I enter Vikram Solar for the next 3 years? Shahina, I'll come to you. Vikram Solar, as far as solar energy or alternative source of energy is concerned, do you see value in Vikram Solar for the next 3 years? I mean, given the current market price?
Yeah, I mean they have got and the stock has corrected actually after its IPO, and it has been consolidating for some time. In terms of valuation now, after this correction, it has started looking quite. It is attractive, and they have got a lot of orders in place, and they are expanding capacity. So if you're a medium to longer term investor, yes, one can actually start to nibble in. It may still consolidate at current levels, but I would say that yes, you can start buying if you're a long-term investor and hold it for the medium to longer term.
Okay, so that's the view coming in on Vikram Solar. But on that note, we need to slip into a very short break. We'll address many more queries on the other side. Stay tuned.
Welcome back. You're tuned into Buy Now Sell Now, a show where we get all your stock-specific questions answered. The number is still flashing on top of your screens, so do write into us and we'll get them answered by our experts. And let's get going with the questions. Gopi Raj has been writing in he's a caller, he's a live caller now who's joining us from Thiruvananthapuram. Hi, good morning, Mr. Gopi Raj. Thank you so much for calling us.
Hi, good morning.
Tell us what's your question.
So I have IRCT stocks which I bought for 805,
Okay.
and I have around 43 stocks. Should I sell it, or should I hold an average? What should I do?
And how long are you willing to hold this?
I am okay with 5 to 6 years.
Oh, that's a long time horizon. So, Shaina, I'll come to you. IRCTC, fair bit of correction that we've seen here in the railway counters. Do you see any reversal coming in on IRCTC, the railway pack? Because he's willing to hold it on for quite some time, but would you recommend a hold?
I think it is better to book some bit of loss and exit because we saw numbers actually that they reported even in the last quarter were not very encouraging. And while there are a number of new trains that are being, especially Vande Bharat, that are coming up, as well as the fact that the government is encouraging a lot of non-ticket revenues also to support growth. Here, I believe IRCTC will have to manage its margins to start reporting decent numbers. While valuations have started looking decent, they're not too expensive, and the stock also has corrected if you see a medium-term period. I still say that there are better sectors available. So I would suggest at least partly book half your loss, because for the shorter term, next 3 months to 6 months, I don't see the stock really giving any decent return from current levels.
Okay, so that's the view coming in on IRCTC, but we have Venkata Raman who has written to us from Bengaluru, and he has a question on Granules India. Now, he has about 1500 shares which were bought at 380 rupees per share with a 1-year time horizon, and he's asking whether he should add more to his existing position. Shahina, what will your view be on Granules?
I would say Granules, I would say Granules looks decent from current levels. FY26 was not too great for any of the pharma stocks, but FY27 starts to look better because I would believe that there are a number of ANDAs that they have filed, and they have a couple of approvals that are pending that should start contributing to FY27 revenues, and they are projecting a double digit growth. So I would say Granules at current levels is a hold.
Granules as a whole, but let's move on to the next question. Vishwa is writing in from Andhra Pradesh. He says he has Tata Steel. The entry price is 222. He's holding the stock for a month now. It's not really giving any returns. He would like to understand whether the stock will increase or will go up in the coming next 1 to 2 weeks. There's a short-term time horizon he may in Tata Steel. Do you see any up moves coming in? What should be his strategy?
Firstly, the strategy is keep a stop loss at 184.50. That is your cash market level, Ankita. I believe a bounce is around the corner. We need a close above 193. Close above 193 would open the doors for an upside to 201. Anything more than that, his cost seems currently from his time frame not achievable.
Okay, so that's the view coming in on Tata Steel, but we have Nayani Ramesh who's written to us from Hyderabad with a question on Aurobindo Pharma. Now, the viewer has about 60 shares bought at 810, and he's asking whether it is a good idea to switch to Divi's Laboratories at this point in time. Shahina, this question will again be for you. Divi's Laboratories versus Aurobindo Pharma. What will your recommendation be?
I think both the stocks look decent. If you're a 1 to 2 year investor or even a long term investor, I would suggest continue to hold Aurobindo Pharma. They have a number of products that are targeted for launch even during the current year. And I believe that they are doing well both in European market as well as US market. Valuations also, and if you compare it with the rest of the pharma market, they are very attractively valued if you compare their revenues versus their market cap. Market cap is just about 90,000 crores as of now. The debt level is also pretty attractive. They are pretty low leverage, as well as they are expanding through acquisitions. So I would continue to hold Arvindo Pharma. Yes, if you are looking to add DV's labs, I would say that they also will do well if you are holding it for the medium to longer term. But I don't recommend a switch as of now.
All right, let's move on to the next question. This is Venkatesh, who's writing in from Hyderabad. Says he has Crompton Greaves, and he wants the entry price is 285, and he wants to know if he can buy more for the next 2 to 3 years. Coming to you, Shaina, Crompton Greaves for the next 2 to 3 years. Would you recommend a hold, and can he add more to this?
Crompton Greaves is talking of expanding capacity, raising funds. So I would say that Crompton Greaves, if you are a longer term investor, the overall sector is also doing well. So you could continue to hold for the medium to longer term.
Okay, so that's the view coming in on Crompton Greaves, but we have Pradeep who has written to us from Amravati, and he has questions on two stocks. One is Coforge from the IT sector. He has about 3,000 shares, 595 is the purchase price, and he has clearly said that he's a long-term investor. And second is on Coal India, where his purchase price is about 171. What will the recommendation be for the next 2 years? That's the question. Shahina, Coforge and Coal India, both questions for you.
Well, Coal India, I think given the fact that they are talking of increasing their production, and I would say average coal prices also stable. The demand is also stable. Coal India looks like a high dividend paying company also. So one could continue to hold Coal India. Coforge is again in the IT segment. So if you want to pick up one stock, I would believe if you are invested in the IT space, one or two stocks in the large cap is more than enough. So I would say my best pick in the IT segment as of now would be Infosys rather than Coforge. So I would suggest a switch. But otherwise, if you're looking for a dividend play and a stable longer term investment, you could continue Coal India for some more time.
So that's the view coming in on Coal India and Coforge. But congratulations to you, Pradeep. That's a huge profit that you're sitting on, and it's always a pleasure to see investors make so much of money out of these stocks, and he's doing well, and that's the view coming in for Coal India. And let's move on to the next question that's coming in from Sampath Malu, who's writing in from Pune, and he says he has Protein. The entry price is 740, and he's been holding it and buying at dips as well. What's the future of the company? Okay, he's not given a time horizon, but he's sitting at a loss there. Himena, I'll come to you. He wants to buy this on dip. Would you recommend that, or what should be his strategy, though there is no time horizon here?
Okay, firstly, it doesn't look bad. I believe we've had a very deep correction. That's a mild word. 2200 to 450 is not deep, it's catastrophic. Having said that, I believe base formation is in place. Downside seems limited. Supported 470, 520. Sorry, supported 570 and 520. We would take some time. It's taken this time. It would take some more time. So I would say it quantifies as a hold, if not a buy. A weekly close above 650 followed by a close above 696 would trigger off an intermediate uptrend. I believe the worst is past us. We are forming a base and things should be better going forward, but this is not a very short term call.
Okay, so that's the view coming in on Protean Eager, but we also have Shrikant, who has written to us from Hyderabad with his question on Paytm. He has about 100 shares bought at 1376, and he's asking what should he do with the current position. So Paytm, we'll take a fundamental as well as technical view. The view has not mentioned his time horizon. But Shahina, let me come to you first then. Paytm, what will the view be fundamentally on this counter?
Paytm, I think the stock has started, has given you a bit of a bounce from the fall that it had last couple of quarters. But I would say that in terms of valuations, it is a bit expensive at current levels. So in my view, one can take the current levels to switch. If you're a longer term investor and not really concerned about shorter term valuations, then you could continue to hold, but otherwise I would say switch.
Okay, and Hemen, what will your view be on the charts for Paytm?
The move from 1020 to 1400 means I wouldn't buy currently. It needs a cool off, it needs a correction. And we moved up from sub 950. So I believe a slight overbought situation would mean a consolidation. The bigger picture remains positive though.
All right, let's move on to the next question that is coming in. From Gopal Raju from Andhra Pradesh. He says he is polycap. The entry price is 4,800. Should he book profits or continue to hold? Polycap, okay. Let me come to, he's not given a time horizon, but China, I'll come to you. He wants to know about Polycab India. Now, Polycab, though fundamentally a strong company, is valuation giving you comfort there, and should he hold on to it?
Well, see, in terms of valuations, it does look like it is pretty expensive, but they continue to do very well in terms of their overall numbers. If you saw the last quarter numbers also were very strong. But I would say a fresh investment at current levels is not advised because valuations are expensive, one, and two, there's a lot of capacity that is likely to come in the overall cable segment from very large players, and their capacity, I think, or their entry should be there within the next couple of quarters. So, to some extent, I think Polycab, the strong numbers that it reported in the last 2 quarters is now fully captured into the current up move and the price. So I wouldn't make any fresh investments at current levels. I would avoid. If you have bought it at very low levels and you're willing to hold it for the next 1 2 quarters, fine. But otherwise, no fresh investments at current levels.
Okay, so that's the view coming in on Polycab, but we also have Chinmay, who is written to us from Mumbai, and his question is on Inox Wind. Now, he has about 30 shares bought at 149, and his question is whether he should continue holding on to this position or add more. Shahina, what will your view be on this counter, Inox Wind?
The Inox Wind has corrected a lot from some of its highs that it had in the last, say, a year prior. And I would believe, yes, it has got a lot of capacity that is they're adding, as well as in terms of valuations, they are reasonable at current levels. But I would say that, see, we discussed something like Vikram Solar earlier. So if I was to pick between the two, I would prefer a Vikram Solar, because not only are they, not only they have huge orders in the existing solar business, but they're also expanding capacity. They're getting into BESS, like battery storage. They are getting into their chips. They are expanding capacity. So I would say that given the fact that the overall segment is going to do well, and if one needs to be in one or two stocks in the overall segment, I would prefer a Vikram Solar.
Okay, a Vikram Solar is preferred. Let's move on to the next question. Ravi Sagar is writing in from Hyderabad. He says, yes, Shivalik Biometal. The entry price is 790. Should he hold or should he sell? Okay, Himen, I'll come to you. He has Shivalik Biometals and it has given some great returns over the last 6 months. Do you think this stock will cool off now, or should he? What should be his strategy? Should he cut his losses at this point?
Your view is spot on, Ankita. I think it could cool off. It's had a great run. It's tired. It's stagnated. So if you have a time frame for more than a year, once again, we have data for 4.5 years, probably not enough for a longer term call, but you have a time frame for more than a year, then it's a hold. Otherwise, one could probably exit over here. A close below 690 could mean some more weakness. The bigger picture, like I said, remains fine because it's broken out of what 2.5 years of a consolidation between 340 and 740, gave a breakout, cooled off. So hold only if it's a longer term view. Otherwise, you need to take a hit.
Shivalik Biometal, that's the fundamental and technical view coming in on that counter. But let's shift focus then. Madhu has written to us from Bangalore and she has a question on Anant Raj. She has about 80 shares bought at 556 rupees per share. She's asking whether she should continue holding on to this position or book profits. What will your view be, Hemen? First up, your view on Anantraj on the charts.
I'm positive on the stock, Ashesha, especially if the time frame is from a slightly longer term point of view. A close up of 600 would mean a further upside. We are in 2026, 2028. We'd probably see four figures in the stock. Looks good, has a deep correction. Most of the realty stocks have done well. Anantraj is not going to stay back. I am positive and will remain positive for the next year or two.
Okay, and Shahina, what will your view be? I believe it's a play on data center because it is investing heavily across data centers. Your view on Anantraj?
Well, yes. So it is a play on the future entry or future contribution of its revenues from data centers, because that contribution will start hitting in only, I think, about from next year onwards. Currently, actually, it's the real estate which is contributing to a major chunk of their revenues as well as profitability. I would say that yes, one can hold at current levels and hold it for the medium to longer term to actually capture the upside that will come from the data center entry. In valuations, I would say it's reasonable. It's not expensive, also it's not cheap also. So I would say hold if you're holding it and hold it for the medium term.
Okay. So that was the last question for the day. Shaina and Hemen, thank you so much for taking the time out and joining us and answering all the stock-related questions. We'll let you go on that note, and it's time for us to slip into a short break. So don't go anywhere. We'll be right back, and we'll get you more updates on the market on the other side. So stay tuned.
Back, you're still tuned into Buy Now, Sell Now on ET Now, and let's put the spotlight on an ET Now exclusive now. The Union Cabinet is likely to approve 1.25 lakh crore India Semiconductor Mission 2.0 today. And Prakash Priyadarshi, my colleague, is now joining us with more details on this. Prakash, tell us, what are you gathering with respect to this new semiconductor mission?
Well, the Indian Cabinet may consider some key proposals today. In fact, the Cabinet is likely to consider India Semiconductor Mission 2.0, rupees 1.25 lakh crore scheme, which has already been cleared by the Expenditure Finance Committee under the Ministry of Finance, may receive the Cabinet nod. A very significant development. In fact, all formalities related to the proposal have been completed, which is likely to approved by the Indian Cabinet. In fact, the scheme will be expanded in terms of manufacturing support and incentives to develop the semiconductor ecosystem in the country. In addition to that, we are given to understand that the Indian Cabinet is likely to approve the continuation of area subsidy scheme to support farmers amid geopolitical uncertainties. In fact, the three components of the urea subsidy scheme will be expanded. These are subsidy support for indigenous urea, imported urea, and of course uniform freight. A very crucial development at this point in time, as we are facing supply-related disruptions in terms of raw materials. In addition to that, some key infrastructure projects are also there on the agenda for the Indian Cabinet for its consideration. The Cabinet is likely to approve road infrastructure projects worth rupees 25,000 crore for Varanasi.
All right, let's move on and talk about the new kid on the block. A new listing today, Kusumgar, that is IPO'd today on D Street, and that has had a stellar listing gain of almost 37% odd. It opened at 569 as compared to the issue price of 419 rupees, and this was a public issue of 650 crores, and it was subscribed almost 135 times. And right now also it is sitting at strong gains. But let's also get a perspective on what's going to be the growth roadmap ahead for the company from Ankur Kothari, who's the CEO, Kusumgar Limited, who's now joining us. Good morning, Mr. Kothari. Thank you so much for joining us today. Mr. Kothari, first of all, congratulations on your listing. Tell us what are going to be the top strategic priorities for Kusumgar over the next 3 to 5 years.
I think for us, continuing to generate a steady pipeline of products to serve our customers is the most important strategy. The company focuses on R&D and innovation in a large way, and to be able to churn out products to meet our customers' requirement is going to be the most important strategy, followed by the fact that international expansion across various geographies, particularly for our defense segment, that is going to be an important part of what we will be doing over the next few years. And thirdly, continuing to improve upon our operations, our supply chain capabilities, and making sure that our quality, cost, and delivery parameters are consistent. That's going to be another important strategy for us.
Right. Also tell us that technical textiles is a fast evolving industry. Which end user segment, defense, industrial or automotive offers the strongest long-term growth opportunity for you?
I think it becomes a little different for each company. For example, in the kind of products that we are focused upon, aerospace and defense is a very attractive industry that we are focused upon. I think even on the consumer side, if you take athleisure, sportswear, etc., I believe even that industry has an extremely high potential to grow in the future. These are the ones that I can think of at this moment, but I'm sure depending on the application for different end products, there will be different end markets that would be very attractive.
And let's also talk about overall capacity then, which is decreasing on a year-on-year basis. What are the main reasons behind this capacity declining?
I think capacity addition is something that was done over the last couple of years. In any major capex, it does take time to build capacity utilization. We are on the path, and over a period of time, we expect these numbers to improve.
Mr. Kothari, let's also talk about your export strategy. Can you throw some more light on what is your export strategy and which international markets do you see as key growth drivers for the company over the next few years?
I think exports has always been a reasonably large part of our revenue base. I think the strategy has been that we end up the business does definitely start with product development. We develop certain products, we sell to one customer maybe in India first, and then exports, or maybe starting with exports, and then once you have started working with one company in one country, you expand across customers and across countries. I think that's a strategy that we'll continue to follow. I think the focus has to be on product development and innovation. Once that pipeline is on track, I think getting a product out, commercializing it internationally, that is relatively more straightforward.
Right. And speaking of exports, currently what percentage of the revenue comes from exports?
I think on a steady state basis, it's been around 30 to 40%.
Okay. Also, can you share your revenue and EBITDA margin guidance for FY27 and the medium-term target as well?
There is always a certain level of uncertainty inherent in our business, so I'll not be able to share any medium-term guidance or so. What I can safely say is that from a long-term perspective, we continue to be on our path to developing excellent products for our customers and expanding our customer range. So we should be able to keep growing at a reasonable pace.
Okay, so that's the view coming in. Mr. Kothari, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what the outlook for the company could look like. And congratulations once again on your listing. But that's all the time we have on this edition of the show. Thanks so much for tuning in. Markets at noon will come up next.